Welcome back to the channel. My name is Patrick, and in this video I'm going to conclude the backtesting session that I was doing using price action to read charts. So what you're about to watch now is the continuation of where we were, and this will serve as part 2 of this series. Hope you enjoy it. If you found value from it so far, hit that like button, hit the subscribe button, and support the channel. Let's get busy. So here we have our Asian session trend. Again, it's trending up. Okay, I'm gonna do it like that. So it's trending up. So we have a low here, a high, a higher low, a higher high. Consolidates really. This is all consolidation, but let's read it. Let's continue. A higher low again, because it's respecting this last high, pushes up here and creates a higher high. Okay, so then at this point here it slows down, it stops, and then this is our last low. That should be our last low. This is our last low. It comes down here, it flags up, and it breaks. So whether it's that or that, it breaks structure. Okay, we have a flag, yep. We have a breaking structure, yeah. So that's our fake breaker, a pole, a flag, a pole. That's a breaking structure. We want price to come back into this zone, and we're looking for a third pole out. So we've already entered. So it breaks structure there. When price returns here, we've entered nice and early. You can wait for a better entry when price fills this imbalance here, so you could try and wait for it. It doesn't always get there. You could wait for an entry based on this and look for 50%, so you could get it there. That's a good entry where you're only risking 9 pips, but you don't always get that 50%. So I prefer to get in at this breakout point. Okay, so that's what we've been testing. I'm going to keep it consistent. So 17 pips. Now at 17 pips, that might be a lot to risk. Okay, so you need to consider this. Every move, you need to consider how much you're willing to risk. Forget how much you want to make. How much are you willing to risk? At 17 pips, that's a lot. So maybe you reduce the quantity, reduce the size, or maybe you do your calculation just for 0.5 or 1% of your account size. Whatever you prefer to do, you manage your risk. So a lot of people would wait for price to come back here to give them a better risk to reward. So wait for price to come back here, and you could enter based on this imbalance here. There's resistance there, and you could just 9 pips. That's okay. And when you get 9 pips, 1-to-1 is easier. Okay, and that's why it's better to reduce your risk. To get a 1-to-1, if you have a 17 pips, you're asking the market from this point to do a lot more. It's a lot harder to get 17 pips than it is to get 9 pips. So you're asking the market to move a lot further in your direction before you could get TP. So if you're scalping moves, you don't want to be in that situation. If you're swinging move, it doesn't really matter because you're looking for a bigger win. Okay, so anyway, so we'll stick to our 1-to-1, 17 pips. Do we get it? We get it quite easily. Regardless, we get our 17 pips on this push out here. So price did consolidate a long time. It started here at 1040 and it moved out here at 330. So almost 5 hours of consolidation before it moved out, but nonetheless it did move out. In this situation, it's going to be very hard to hold this move. Okay, and as you can see, if you had left your stop loss at that last flag, you would have just got stopped out 2 times before you got your move. And this is why I do not leave it at that flag. I don't leave it just above this high, because again, manipulation. There's algorithms out there knowing that we are looking to place our stop loss just there, so it will just go just enough to stop us out and still get the move that we read right, and you're out of the move now. Okay, so you're going to be very emotional at this stage. The best place to stop it, place your stop loss is there, because once it beats this high, that's when we know we have not got a reversal, we have not got a downtrend, it's going further up. So that is why I place my stop loss there, nowhere else. Okay, and that's that move. Again, it moved a lot further than 15 pips. It did a lot further than 1-to-1. It went all the way down here. That's about 200 pips. Okay, so as you can see, this is definitely the start of the move. This is definitely where price tapped in, and there's a lots of explanation for it. This is London tapping into that move. Everyone's orders are being generated before it moves out. This was a news catalyst that broke it. It pushed out from that news catalyst. So market was anticipating the news. There's so many reasons for it. Okay, a New York session wasn't involved. New York session wanted to get involved. It got back here. New York session traders got involved, or banks got involved, and then they were all in agreement and drove price further down. Whatever way you want to explain it, this is why I do this, because this is where the moves are usually generated. So it's so key to know what price action is. Okay, so I'll give you a few examples here. There's a few more. I'm conscious that this video is running a bit long, so I'll probably do this as a part 2, and I'm gonna just keep on showing you examples and until we do 10 trades. Let's see how many trades we've got. So let's just zoom out and show you quickly all that I've marked up. I do believe we have 10 trades here. So we have 1 here, 2, 3, 4, 5, 6, 7, 8. Okay, let's do 1 more here, and I'll show you the trade I took this morning using this strategy. Okay, so where are we? So we're on the 30th. Let's go to the 29th. We do 1 more trade. 29th. Yeah, there we go. 1 more trade, and we call it 10. We got a nice even number, so we could get our percentage and win rate based on this strategy. I already know what mine is. If you've been following, you know what mine is, but let's assume you don't. Okay, so price from the previous day was coming up here. Let's ignore that for now. Asia session pushes up, flags here. This is a 1 minute flag, pushes up, flags here, pulls out. That's a 1 minute, that's a 5 minute pull out. So we have an uptrend here. Okay, so it keeps on going, slows down, but still, as you can see, still respecting these lows. So still got a uptrend. Okay, at this point here, it doesn't respect this low, this last low anymore. Okay, it breaks there. Okay, so as you can see, I've been back testing this a fair bit, and I've gotten used to reading the charts. I can see the breaking structures quite quickly. Let me zoom in just in case you can't see it. And this is what you should spend your time doing rather than using indicators, because indicators will just, they're delayed, they're lagging. They will show you something you can actually see yourself, but they'll show you after the move has started. So definitely move away from indicators. Anyway, so we have a high here, a high. It's going to come here and push up again. It doesn't, it breaks and changes direction there. Okay, so we have a pole, a flag, a pole. That's our first pole, flag, pole. Our move is based on the this, right, the third pole out. So as you see, price did break structure here. It pulled back in to that pivot point where it changed direction, and it pushes it down again. So 1-to-1, that's very easy here. 5 pips, and we get 5 pips. Now remember, I said I'm not trading before London session. So as you see, I'm not entering here. I'm entering here. That's London session start. London session started actually on this candle. It consolidated. London session taps into that zone, and it's an agreement. Price needs to go down, and it took it down from there. Okay, so look, how many more examples can I show you? This is how the market moves. Okay, you can read the market wrong. The market can consolidate, and it can chop you up, and it can take you out, and can go in your direction regardless. But in most cases, this is how it works. Okay, and this is why I prefer to trade this way, because I'm trade it in accordance with the market rather than trying to fight the market, which is something I used to do. And rather than trying to chase the market, I try to join the market and go in the same direction. Okay, so 5 pips, you can see it went a lot further. Okay, it's 32 pips there, and if we zoom out, you can see it even went a lot further. So this move here went all the way down to there. Okay, so basically this Asian session was a continuation of the London session. This was the New York session, didn't do much, but both sessions were in agreement. All 3 sessions were in agreement to price there, and that's when London changed it. Okay, so risk to reward, we're risking 5 pips, and we have 65 pips. Okay, so 1 to 12 there. Okay, so as you can see, I've given you lots of examples here. Let's just mark that up and let's see how we did. Okay, so let's zoom out. Let's go to M15. I think we can see it all in M15. And we have 1, 2, 3, 4, 5, 6, 7, 8 trades, 9 trades. We do one more. So 9 trades and we do one more. So bonus here, this is the trade I took this morning. So this isn't just back testing, this is actual, forward testing. I do trade this. I'm not just one of those YouTubers who's talking about trading and not actually trading and giving you examples, tons of examples of strategies they don't actually use. Yeah, that's a bit annoying for me, to be honest. Especially you're trying to learn how to trade and you've got tons of examples from big YouTubers who are giving you all these examples and they're not actually trading them. So they don't believe in them, but yet they marketing them to you. What does that tell you? It's about the views. Anyway, so that's another subject. Let's get back to this, just clearing this up while I have my little rant. Okay, rant over. Now, we know what happened yesterday. I lost that trade down there. So today, I'm expecting price to retrace a fair bit actually, maybe into this demand zone. Okay, so let's see what Asia session does. Is it in agreement with what I believe? So Asia session consolidates. Hold on. Okay, Asian session here consolidates here and pushes down. Okay, it's downtrending now. It pulls up, holds, pushes down, kind of holds. Yeah, that's a lower low here. Holds here and pushes up. This high here pushes up, but respects this last high. Okay, so it respects this last high. So for me, that's important. Okay, because if you zoom out, you can see it respected yesterday's high. Okay, so we have our breaking structure there. Okay, that was our uptrend and it slowed down here and it broke structure. Lower volume session consolidates through the night. Asia session decides that it wants to continue going down. There's money to be made there. Why? Because anyone who was trailing this move up here, your stop losses are now a target. So that was the theory, and all I needed was some kind of confirmation. So that's our key point. That's our key price point here. Okay, so we're not trading before Asian session. London session is what we are after. London session starts here on this candle. Okay, and again, I said I'm awake just before London session. I am looking at the charts. To be honest, I am looking at the charts here. Okay, I'm looking at the charts here. So I've already had a look at this point. I've seen that this high just respects this, and then it drives down, creates a flag, and breaks. Okay, so that there was my breaking structure, telling me that price respected the Asian high here, that drove this low, came up here, created this low, and then had this little attempt here. But this move here to break the structure was pivotal. Okay, now why? Because I know for price to go down, a lot of times it goes up first. You need to buy up to sell down. Okay, same in reverse. For it to go up, you need to sell before it goes up. I don't know why that is, but if you have a look, that's how the market moves. Okay, so price action again is key. Okay, so here it buys up, it breaks there, it sells there, buys up, and then breaks structure there. Okay, so break structure there, we have our flag. So when price from here pulls back into the zone here, I'm looking at an entry here, and my stop loss is above this guy here, 7 pips. So 1-to-1, that's very easy. Okay, yeah. So again, I do not just talk, I actually trade. Here's my entry, here's 1-to-1, and I'm out there. Okay, now I anticipated this move going further. I do believe it's going to go further. How far, I don't know, but as you can see, I did mark it up, these lows here, and I marked it up based, and actually I anticipate it going here. Let's just get rid of this now. I anticipate it going here, because if buyers are going to step into this market again, try to run these highs, I would expect it to come from this demand zone here. Okay, so this is where I would have liked to have taken price, but I do not like sitting in moves. It makes me anxious, my emotions get cloudy, and I start doing silly things. It's easier for me to take a quick 1-to-1 and get out of the move rather than spend another. So I was finished trading, let's see, I finished that trade within, call that 10-20 minutes. Okay, I'm not going to sit around 3 hours just to get a 1-to-2, 1-to-2. Yeah, I'm not going to do that when I can make 1% on my 1-to-1 within 20 minutes. Okay, so I've done that. I wanted to leave a runner, but I decided just to have a layback day today and do this video instead, rather than overtrade and get tied up emotionally. I'm trying to be more consistent, so I need to have a consistent behavior. Okay, so that's the bonus there. That's the trade I took this morning. Let's mark that up. Let's go, where was it? Where was that entry? And that's the zone. Okay, so let's see how we did. We had 10 trades. 1, 2, 3, 4, 5. Hold on. Let's just zoom out. Let's tidy up a little bit. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades, 1, 2, 2 losses, 8 wins, 2 losses, 80% win rate. Okay, people, you've seen it already. If you're subscribed, if you've been following, you know my win rate. Okay, 80% is what this. Do you know what? Let's be modest. 70% is what this strategy will give you. Okay, and as you can see, in a lot of situations, we got a 2-to-1, 2-to-1. Okay, that's just a 1-to-1. 2-to-1, 2-to-1. And this is why I wanted to zoom out actually. As you can see, look, this is the swing points. This is where the move started. It went from here, took it all the way down to demand. Demand came, took it all the way up. We didn't catch this move because that was a New York session swing. So New York took it down, all the way down. And again, people, this is price action. This is the same thing I showed you in the beginning. So we had our pole, flag, all the way down, pole, flag, got to here, and what do we have? We had this reversal. It polled here, flag there, polled. To continue, it should flag here and continue down. It didn't. It broke that structure there. So you could scalp this, or you could swing trade this. If you're happy to hold moves, you can see your entry points. You could have waited for price to come back here off this demand, and taken it from this point and held it, okay, and held it, and or actually better yet, when price created this high, it comes back into this pivot point here, took this reversal move here from this point here and held it to beat this high, okay. Yeah, it's the same thing we were looking at on a line lower time frame. This is 100 pips. That's a 100 pip move. I know this works. I know a lot of people trade like this. I can't trade like this because to hold it from this point where I saw the reversal, or hold it from here because it taps into this demand, to hold it to then, that's 1, 2, 3, 4, 5 days before it beats that high. And in that point, it did a lot of this. Look, if you had a tight stop loss, you would have been taken out there, taken out there. It did a lot of this before it got there. Okay, so now it's beating that high, still within this zone. Price could come all the way back there and take anyone who's holding this too long and take them out as well. Okay, that happens when you hold moves, and that's why I prefer to scalp moves. But this is universal, H1, daily, M1, M5, regardless. Whatever time frame you feel comfortable trading, you can trade this setup and you have a reasonably high win rate, 70% easily. Scalping 1-to-1, or you could hold it for 2-to-1, and even if you took a loss here, you were patient, you got into that move here, you would have won, because we are in demand. It's a universal, it's almost like a universal law, probably is. Supply here, price moved down from there. Demand here, price moved up from here. Got up here in supply on the higher time frame, we can see that it moved down here. Got down to demand, it moved up. Taps into that supply, this imbalance here, put a reversal, comes down. This is how the market works. If you're trading any other way, good luck. Good luck. Hope the best for you. Not knocking it. There are other strategies, there are things that works, but if you want something that's consistent, that's going to give you a better risk to reward, this is what it is. Supply and demand, scalping, swing trading, whatever you want to do, this is the best way to read charts with no indicators needed. Okay, my personal opinion, you have your own, no problem. People, I'm going to wrap this up here. I'm going to do this as a part 1, this is the part 2, and hopefully you enjoyed it all. There's a lot I covered. Maybe hit the like button to show your appreciation, and if you find this useful, if you have any questions, let me know in the comment section. Hit the subscribe button, show me the support, and I'll keep getting these videos out to you. I know there's a few of you love videos like this, so I'm dedicating this to you because I know you will appreciate this. So this is for you out there, and for those who don't, who want short videos on how to get rich quick, I don't do those videos. I don't know how to do that, and there's no get rich quick strategy that's consistent. Okay, so go wrap it up there. Hope you've enjoyed this. This is Patrick signing out, and until next time, peace.